One of the most difficult topics for students in accounting, and an essential topic for students, is the accounting cycle. And we think we have kind of a unique way of introducing the accounting cycle and teaching the accounting cycle to students in our textbook. First, we start with November transactions in chapter number 1, very simple transactions. And we record that using the accounting equation and a column format underneath the accounting equation. And we actually generate financial statements in chapter number 1, very simple financial statements. Then we carry that forward to chapter 2, where now what we want to do is introduce the rules of debit and credit. So what we do is we take the column format of chapter 1 and we start with that in chapter 2. And we say, okay, now we're going to introduce the concept of rules of debit and credit. We want to record these transactions, same transactions, simplifying it for students. We want to record those transactions using a new tool, the rules of debit and credit. And so we go through and record the same transactions which they looked at in chapter number 1, in chapter number 2 using the rules of debit and credit. And then we go a step further and say, okay, now let's look at a new month's transactions, December. And so we go through and record December's transactions also in chapter 2, ending with unadjusted trial balance. We all do this all for Net Solutions. As you'll see in our textbook, we use Net Solutions, one company, through chapters 1 through 4 as the basis for illustration, just to simplify it for students, to reduce the noise that students might have if you switch companies. And so then in chapter 3, we start with the unadjusted trial balance from chapter number 2, and we introduce the concept of adjusting entries, and we go through adjusting entries for Net Solutions transactions for November and December in chapter number 3. We end up chapter number 3 with an adjusted trial balance, and we also have an exhibit which summarizes all the adjustments using one column shows the Net Solutions example, one column shows just the basic generic type of adjusting entries, and we also show the impact in that exhibit on the financial statements if you failed to make an adjusting entry, or what the impact of the adjusting entry is on the financial statements. Then we start chapter number 4 with the adjusted trial balance from chapter number 3, Net Solutions, and we finish up the accounting process by generating financial statements, followed by closing entries and a post-closing trial balance. So what we have done in chapters 1 through 4, using one company, we've illustrated uniquely to that company the entire accounting cycle. But we're not done yet. What we want to do is reinforce that again by introducing in chapter 4 a comprehensive illustration of another company, a new company. Let's start from scratch and do it again with not with Net Solutions, with Kelly Consulting. So at the end of chapter 4, we do another illustration of the accounting cycle, new company, Kelly Consulting, go through the entire process and end up with financial statements. But again, we're not done. What we also have in chapter 4 is a comprehensive problem using Kelly Consulting for a second period. So what students are getting here is they're going through the accounting cycle for Net Solutions in a very slow, mechanical fashion with chapters 1 through 4. And now they're getting it again with Kelly Consulting, and again with a comprehensive illustration. So the objective is by the end of chapter 4, students have a solid foundation, understand the accounting cycle. Now they're ready to go forward to the other financial chapters.